And the Director General of the Debt Management Office, Patience Oniha, says Nigeria is working to issue Eurobonds and plans to pick advisors through an open bid process. So joining me to discuss the prospects of such Eurobond issuance amid global market trends is Seun Ameye, a fixed income trader at Citi Nigeria. Seun, thank you so much for taking the time out to join us today. Now, the federal government says it expects a 5.6 trillion naira deficit for the fiscal year and plans to finance this deficit through a combination of domestic and foreign debt. But it also says that it will be monitoring international markets for new issues by frontier markets. Just help us just talk to us about what our chances are in terms of what Nigeria is going to put on the table as it woos international fixed income investors.
Hi, good afternoon. Thank you for having me. Like I already said in the news, Ghana issued a Eurobond last week. And in fact, Egypt has issued a Eurobond earlier in February. So we're seeing a trend of emerging on frontier markets issuing Eurobonds. For me, two things stand out really. How international investors, receive their Eurobonds is dependent on two things for me. For Nigeria, it's going to be the price of oil. And secondly, the whole broad offshore investment interest in emerging or frontier markets. Now, compared to what we saw like a year ago, we are obviously on a better footing. Oil is over 60% up from what we were last year. And despite the recent volatility we see in emerging market and frontier markets, we've seen a gradual shift towards emerging market risk from offshore investors. So really, while it's hard to say what the best time to go to international capital market is, we are obviously at a better position than we were like a year ago.
Well, that being said, but is there a chance that there could be issues that could potentially hurt Nigeria's chances of raising whatever amount that the DMO plans to raise from the Eurobond market? What sort of questions would investors be asking, perhaps from a fiscal and monetary perspective?
Basically, like I said, I think the developments DM will be watching for are those things that really improve or reduce investor appetite for Nigerian bonds. And typically, like I said, I think it's two-way. First, it's oil. Is the major driver of our revenues, especially offshore dollar revenues, and the investor will be looking at at the price of oil or the prospect of oil in the longer term. Like I said, I think that is good for now. I think better than what we had a year ago. So really, I don't see anything happening there. I only see that improving, and we are also seeing investors moving into emerging markets. So really, except we see a major drop in price of oil and international appetite for risk worsens and investors are moving back to safe havens, I think we are on a better footing, really.
Now, it would appear, and as you've already alluded to, that credit investors are more willing now to embrace more risk. Ghana's recent zero-coupon Eurobond is a classic example. What should Nigeria take from that in terms of, does that increase our confidence levels on part of the federal government? And if is this something Nigeria could also consider, that zero-coupon Eurobond, or are our circumstances different?
Really, I don't see why they cannot issue zero-coupon Eurobonds. Depends on the mix that the DMO is looking at, really. There's not a lot of information to actually say that they should issue zero-coupon bonds or coupon bonds on the side of the public at the moment, really. But I think they will look at their medium-term economic framework, look at what the constraint they have to work with, and decide with their advisors the best way to go ahead with this.
Now, with a deficit of 5.6 trillion to cover this year, what are our chances? Spread between domestic and foreign. I know that the federal government is also looking at concessionary loans so that it doesn't raise too much the debt service. But what are our chances in terms of prospects in terms of raising this 5.6 trillion from markets?
Well, we already saw the DMO starting to raise the 2.3 trillion they wanted to raise from the domestic market. I think that's going to continue, and I think they'll probably be successful in doing that. Really, I expect that when they go to international market, bond offering will be a success. given what we saw in Egypt and what we saw in Ghana. So from the local and Eurobond perspective, I think we have a good chance of raising that. The concessionary loans that will form part of the remaining part of the offshore funding, I think that stands a good chance to really. So the amount they want to borrow from both local and offshore is about 4.6. The other part of the deficit is from local asset sales recoveries, which that is where we may have some. I think we may have some issues. But regarding the amount we want to borrow from local and offshore, I think it's doable. I think that is a good chance.
Now, for concessionary loans, the federal government has also been in talks with the World Bank for a $1.5 billion loan, and that approval has been delayed because the World Bank is looking to Nigeria to take certain reforms, especially around the currency. What are your thoughts on that?
Well, from what I can see, I mean, I think the CBN is working a lot towards that, trying to make sure that we have a. You can see that the reforms in the FX market is continuing, though at a slow and gradual pace. The CBN has always alluded to the fact that they are making the necessary changes, and they will be. They are looking at the conditions set forth by the World Bank. I think we just have to wait and see what happens there, really, and see whether they can hatch out a deal before the fiscal year ends.